Facebook stock is getting crushed. Investors are wondering if it's time to unfriend Facebook. We'll talk about their weak fourth quarter 2021 results and their gloomy first quarter 2022 outlook. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did own stock in Facebook/Meta. FB is the current ticker. And so Facebook stock is plunging down something like 25% this morning after reporting fourth quarter 2021 results. Let's take a minute to understand why. So on a high level, their consolidated operating profit was lower year over year. The reality is that this masks the strength and record results in their core advertising business, which is now lumped into the segment family of apps. Think Facebook, Instagram, WhatsApp. This segment generated $15.9 billion in operating profit, but their metaverse investments via Reality Lab reflects a $3.3 billion loss, which is up significantly year over year. So on a net basis, consolidating these two, it's actually resulting in a decline in profitability year over year. But this isn't the main reason why Facebook stock is getting crushed. Management's guidance for the first quarter of 2022 is downright gloomy. They are expecting revenue to increase 3 to 11% during the first quarter next year. Could Facebook no longer be a growth stock? I mean, that's the sort of the psychological question that investors are considering right now, because that does lead to a re-rating of this business. If so, this is more like a slower growth business that's 98% tied to the advertising industry and its inherent downside cyclicality. So that is something that investors need to contemplate and reflect on. This outlook is made even worse by the fact that management is also guiding to a sizable increase in expenses. If total expenses in 2022 is 90 to 95 billion and revenue only grows, let's say 10% next year to 130 billion, that means operating profitability declines to 37.5 billion. That's a 20% drop from their fiscal 2021 of around 47 billion. That's consolidated. So this gloomy outlook was driven by a few variables. This is the first time that I could tell where two geographic segments posted a sequential decline in daily active users. You see it in North America and rest of the world. It's very clear that North America is a point of user saturation. With more competition for eyeballs, Facebook is showing fewer ads, resulting in less revenue. They're also looking to shift more user engagement to Reels, which is primarily short-form video, to compete with TikTok. But at this point, associated advertising monetizes at lower rates. So effectively, Reels monetizes at lower rates than successful products like more mature, launches like Newsfeed and Stories that have been around longer and has a better, supply-demand dynamic than Reels. So you're looking at effectively fewer ads and a product that monetizes at a lower rate. That does result in headwind to their growth. Management also called out the impact of Apple's iOS changes around privacy, which are impacting ad targeting and the return on investment for those advertisements. This is hurting advertisers across the board, particularly for small and medium-sized businesses, i.e., if you're a small business, you are very sensitive to advertising return on investment. Does this drive a sale? That's the question folks are asking. Versus branded advertising for larger, bigger companies, they're looking to spread a message or increase general awareness. It's a different picture, a different type of advertising that you might be looking at for a much bigger budget versus a smaller business saying, hey, does this actually convert into revenue? Is this a worthwhile investment? Okay, so with the stock down, now it's around 25%, and this slate of bad news, what does the valuation look like? First, quick plug, where if you're interested in joining a community of fellow investors looking to learn and find exceptional companies, we have an exclusive community on Discord. You can sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. Also, if you enjoy this video, please make a point of hitting that thumbs up, hit that subscribe button. And so despite many short-term headwinds, including supply chain shortages that's impacting advertising, at least in the short term that management has called out, the reality is that Meta still owns a series of apps that nearly 3 billion people use every day. That is a heck of a lot of people, touching effectively half of humanity. This company is not going to zero anytime soon. They print tens of billions of free cash flow, and their core advertising business should benefit from inflation over time. I think investors need to ask themselves two main questions. Do you think that their 10 billion plus annual bet on the metaverse, augmented reality, virtual reality is worth anything? The Reality Labs mega loss. do you think that's worth something? So you need to think about that when you're looking at this. How much do you think that could be worth? And 2, do you think they'll continue to grow and monetize their global 3 billion member user base? Those are really that's the crux of this issue. Thinking about these 2 different components. So here's a valuation that gives 0 credit to Reality Lab. 100% ignores Reality Lab. It is 100% focused on their family of apps. So this is primarily the 98% plus that's advertising. And keep in mind, they do have a lot of coals in the fire to do other things like e-commerce. But if this business just maintains their current margins, around their current margins, they're currently around 49% margins. I'm assuming, sort of trying to be conservative, 42 to 49%. I'm assuming that they have to take a hit because of Reels. So if this business just is around the same ballpark margins and managed to grow, keep in mind, this is ignoring Reality Labs. This is focused purely on their family of apps business, and manages to grow in the range that they're guiding to for the first quarter of 2022. So they said 3 to 11%. I'm saying 5 to 10% just to make it a little simpler. You're looking at a business potentially generating around $50 billion in profits next year. Just this core segment. This implies that Facebook/Meta, excluding cash, which is nearly $50 billion as well, is currently trading around a teens multiple of their 2022 core business profitability. This strikes me as interesting. Low teens multiple when you back out the cash. So this bakes in a lot of concerns around the business, around user churn and monetization challenges. Honestly, when I look at the stock price, though, it seems like a very fair reaction by the market, given how low their growth outlook is and how they are still expecting a significant ramp up in expenses. So I think this market reaction is fair, given the uncertainties involved. Personally, I'm still not sure myself what I plan on doing with Facebook. Thankfully, it's not a top position for me, and it's still, even despite this drop, it's still above my cost basis. So I'm looking at this and I'm thinking, what is this business worth that taps 3 billion people, is still growing, and what is generating, let's say, $50 billion in profit a year? Because currently the market cap's shy of $700 billion. Is this business worth, let's say, a teens multiple? And then you layer on the fact that, let's assume 5 years from now that you get some sort of teens multiple and you get the annualized cash flow of this business, which you may or may not get because they might be funneling it into other bets like Reality Labs. But, you can pencil out an attractive return from here. It's not going to be a crazy return if growth rates don't significantly improve. Of course, downside could be way more significant, if they don't execute or if sentiment changes. So that's something to consider. The stock price can always go up way above or way below. But I'm looking at this and I'm thinking market reaction actually seems quite fair. This 25% drop. I'm looking at really weak sort of guidance from management, and I'm conflicted about it. It's not the super large position for me, around 2%, a little less now. And so I'm trying to figure out, is it appropriate for this to be part of my journey longer term, especially given the fact that they're no longer really penciling out crazy growth. And if you're not penciling out crazy growth, are you doing something smart with that free cash flow that gives me high confidence? And so then that gets to the question of Reality Labs. So I'm conflicted about this. I'd absolutely love to hear your take, what you think, what you're going to consider doing with your Facebook or Meta stock. I'd absolutely love to hear your feedback and thoughts, so please leave a comment below. And if you enjoyed this video, please make a point of hitting that thumbs up and hit that subscribe button. Thanks so much for tuning in.